And to change your life when it comes to money, we are blessed to have Darren Farwell, Senior Wealth Advisor of Scotia Wealth Management, with us. Week to week, my jaw drops, and I'm sure some of your jaws drop too, because it's amazing what you can do if you have the right plan. And good morning, Darren.
Good morning, Marilyn.
So what do you have for us today?
Well, speaking about changing lives, I've got to change things up a little bit on you today. I'm usually here to talk about a happy story, but today's story isn't nearly so happy, but there's some important news. And the change is around tax and the recent government proposals to raise the tax burden on small business owners, private corporations, and some specific shareholders of those private corporations. On July 18th, the finance minister released draft legislation specifically to address certain tax planning by small businesses and private corporations. The proposed measures may in fact impact a significant number of Canadian small business owners because according to the federal government statistics from 2015, small business owners represent 97% of the businesses in Canada. This includes restaurant owners, medical professionals, franchisees, real estate agents, store owners, contractors, and many, many more. So the government is casting a very wide net with their proposal. As a result, and needless to say, there's going to be and is a lot of discussion around the potential impact of these changes. In fact, one group claims it will increase the tax rate for small business owners to an overall 93%. That's a bit scary.
Very scary. We have to leave the country.
Well, hopefully not too many will. Well, whatever the actual tax rate ends up being, because again, these are proposals and we don't know what will actually be passed, there's one thing seems for certain: taxes appear poised to go higher. Now, so far I've talked about the proposals threatening an unhappy outcome of higher taxes for small business owners and private corporations. I'll talk a little bit about what those proposals are. I'll summarize three of them based on a research piece from Bank of Nova Scotia Wealth Management Taxation Group. Number one, a reduction of income splitting opportunities. Any dividends paid from a private corporation to adult shareholders age 18 or over in situations where these individuals do not actively participate in or contribute to the business in terms of labor or capital, or where the amounts paid to those individuals are not considered reasonable, those dividends paid will be taxed at the highest marginal tax rate, which in Ontario is 53.53%. Now, those listeners familiar with the kiddie tax will recognize this kind of rule. Now, we're not talking about small change here, Marilyn. The highest dividend tax rate in Ontario is 39.34%, and one would hit that highest tax rate at an annual income of $220,000 per year. The top marginal tax rate in Ontario is, as I said, 53.53. Thus, this proposal could represent a 36% increase in taxes to be paid.
Those numbers are huge, Darren.
It's going to be felt, that's for sure. The second proposal, this proposal is aimed to limit the use of multiple claims under the lifetime capital gains exemption. This has been a common planning practice to reduce taxes owing on the sale of a small business or private corporation. Every lifetime exemption excluded could add $187,500 to the tax bill of a business owner selling their business. As you said, Marilyn, these are big numbers. Now, before I go on to the third one, let me reiterate, I am not an accountant and I'm not giving tax advice. However, as a steward of my client's total wealth, I am diligent in being aware of what is happening with taxation, how to minimize it, and make suggestions about what my client should do about it. Because, as I say frequently, it's not what you make, it's what you keep. Understanding tax is critical in Canada's, increasing tax environment. So now I'll move to the third proposal, in the current draft legislation, and it could certainly have an equally profound long-term impact. Under current rules, many small business owners benefit from a deferral of personal tax, where business income earned inside a corporation is retained or saved in the corporation instead of being distributed to shareholders. These funds are typically kept in the corporation and invested in investment portfolios which generate passive investment income and gains. The Department of Finance has proposed a number of alternatives to eliminate the benefit of such an arrangement. This change could see tax rates on funds saved and invested in your small business or private corporation increase significantly. Now I'm just going to run through a quick number here. So $200,000, if you have retained earnings in your company of $200,000 and you invested it to earn 7% pre-tax, so let's call that 4.9% after tax, for 15 years, the difference between the proposal now could attract 22.23% more taxation. So these three changes, if you add up all of those percentages I was talking about that we've discussed, could add a lot more tax to the financial situation of business owners and owners of private corporations. So my suggestion from today, as these are only proposals, is get your planning started early. The best planning happens when you start planning before you need it. Sam Walton, before he opened a store for Walmart, had done all of his estate planning ahead of time. And those who have done the analysis said he's probably saved his overall estate $1 billion by doing the planning beforehand instead of doing the planning afterwards. So start your planning early. Call a professional and get the wheels turning on how you might be able to deal with the potential changes that are coming.
So if we do that, would you also recommend that we call our government representatives? And is there a chance we could sort of scream at them a little?
Well, that's sort of not the area of my expertise, but I would suggest that political changes are most likely to be impacted by political input. So if you want to have input on this kind of legislation, I would suggest reaching out to a politician.
And this is federal, right?
Yes.
So we can voice our message to the federal and object to this as well. Thanks for pointing it out, because most of us probably, at least I know myself, don't hear about these things and I don't read about them. So unless you give me a moment to drop my jaw, I really don't know. So if someone wants to talk about the impact this has and look at their own financial plan, you always say it's never too late to get a second opinion or to make a plan. Are you going to work today, even in that Hawaiian shirt?
I'm going to go to work today half the day, and hopefully you'll be enjoying sunshine for the second half.
So the same magic number. If you wish immediate gratification and you want to talk about the tax implications to your life or just about your financial plan so you can sleep at night knowing that your money will survive you, the phone number 416-863-7501. That's 416-863-7501. Still free coffee and free parking if we meet with you?
Free coffee and free parking if you'd like to come down and meet me at Scotia Plaza. And I am available to meet people at a local Bank of Nova Scotia branch if that's more convenient.
So you can't lose by getting information. It's all about being proactive. I talk about being empowered. When you have the right information, you can make decisions confident that you're doing things that are right for you personally. Darren Farwell has a whole team at Farwell Wealth Management. In fact, next week, I think Leslie's stepping in for you. And thank you for pointing out all these tax, not really wonderful news that the taxes are going to go up, but at least we heard about it in advance and we can complain and maybe change things a little. 416-863-7501. Call Darren. It's not what you make, it's what you keep. And knowing Darren, you might keep a lot more than you had anticipated. Thanks, Darren. I look forward to seeing you in a couple of weeks.
You're welcome, Marilyn.